Hello to all traders and welcome back to another market review brought to you by Orbex. So it's all about the gold and what direction it's going to go to next, especially with the Fed interest rate expected to hold. And if that does happen, what are we expecting from the dollar? Well, it is likely going to go higher. What will that mean? Gold will be going lower. And we are seeing a slight correction at the moment from just shying off the recent record that we saw not so long ago at the back end of October. So are we going to see a possible another break towards 2900, or are we going to have more of a correction? Well, we have had Trump saying that he's going to impose more tariffs. We have seen that Fed Chair Jerome Powell a bit more hesitant in cutting rates a little bit too quickly. You might see how the year plays out, especially with Donald Trump's first 100 days in charge of the White House, and we'll see if that has any bearing on where we're going to next. So it's been a bit of a wild ride for the yellow metal, especially on the daily chart. We had this record peak, and then we had over $150 slump to the downside, and then we had this bit of a weird test, double top here not so long ago. It was a very, very firm resistance before moving lower, but now we've had this nice bullish rally towards the record peak, but we have just on the daily chart yesterday this bearish full-bodied almost candlestick here to the downside. So now trading, we're trading just shy of 27.30 after losing $30 to $40 in yesterday's trading. But is it something to really start worrying about? Well, let's look on the intraday chart, 4-hour chart now, just seeing that price action is looking likely to keep on moving a little bit higher if they can avoid a full-blown correction. So what we look at corrections here, we're looking at higher highs here, obviously, and moving higher. We're seeing it time and time again, but this particular downturn here has gone a little bit lower than the previous one. So we are now looking at the lower highs at the moment to see if that's going to have any bearing and another move. So the firm support now comes roughly just around 2700, as it always did do, because we are looking to see if prices are going to start looking a bit more bearish than bullish. But very, very good support at the moment for gold in the last few weeks, especially from the beginning of the year, as you can see here when we did start trading back after the break. So if we look at the dollar index as well, like I said, what were we testing before? We saw this record peak, we saw this gap, it failed to be covered here. So we are actually looking at a runaway gap. Now we have just gapped upwards again, so lots of gaps in the market, but from the weekend, we're just seeing now from the bearish continuation from the gold yesterday, we're just naturally seeing a jump on the dollar. So is that going to happen across the board? To be honest, for me, I'll just be looking to see if we can get back up to roughly the higher regions of 108, so just over a dollar move to the upside, cover this gap for a continuation higher. But it's all about the Fed in tomorrow's meeting. Are they going to cut? Are they going to hold? And how much, if they do cut, how much would it be? Most probably by 25 basis points, but it is still looking likely that the Fed, hopefully in full control of the markets, especially with the dollar economy, getting back on track, you could say, avoiding a hard landing, avoiding this recession from last year. So let's see if that keeps on going. So that's all for today. Thank you very much for joining me. As usual, we'll post this video on our YouTube and Telegram channel. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.